For the first 124 years, the United States of America did not have a permanent income tax. I was totally shocked when I learned the simple history of income tax. The Founding Fathers didn't avoid income taxes by accident. They built an entire constitutional architecture designed to make a direct tax on income almost impossible. Under the Articles of Confederation, the government had no independent power to levy taxes. None. The founders were deeply suspicious of direct taxation, meaning any tax levied directly on individuals or their property. So, they built in a safeguard. Article 1, Section 9 of the Constitution stated that no direct tax could be laid unless it was apportioned. This was a near impossible hurdle. When George Washington took office in 1789, the first major piece of legislation signed into law was the Tariff Act of 1789, also known as the Hamilton Tariff. Tariff collection and enforcement was simple. No massive bureaucracy was needed. Instead, customs collectors were stationed at the docks. Prior to 1913, with limited exceptions, according to economic historians, tariffs accounted for 90 to 95% of all federal revenue. Tariffs funded the entire federal government. Thomas Jefferson rode the wave of anti-tax sentiment all the way to the presidency. One of his first acts upon taking office in 1801 was to repeal all internal taxes, including the whiskey excise tax. In 1836, under President Andrew Jackson, the United States achieved something that has never been accomplished before or since. The national debt was paid off entirely. The Revenue Act of 1861 levied a flat 3% tax on all annual incomes above $800 to pay for the Civil War. The Civil War income tax was always planned to be temporary. With the debt paid off, 7 years after the war ended, Congress repealed the income tax in 1872. Congress passed the Wilson-Gorman Tariff Act, which included a provision designed to shift the tax burden toward the wealthy by placing a 2% tax on incomes exceeding $4,000. Many members voted for the bill, knowing the Supreme Court would find it unconstitutional, allowing them to tell constituents they tried. That is what happened. In 1895, the Supreme Court ruled 5-4 that the income tax was unconstitutional in the landmark case of Pollock versus Farmers Loan and Trust Company. The Democratic Party immediately made income tax the focus of its platform, charging the court with judicial usurpation and demanding to tax the rich. In 1909, William Howard Taft, a conservative Republican attempting to garner public support, proposed the 16th Amendment to the Constitution. The Democrats ran with the idea. In 1912, the original progressive tax movement of the Democratic Party peaked when Woodrow Wilson won the 1912 presidential election. Progressive Democratic politicians were in favor of taxing the rich. On February 3, 1913, the 16th Amendment was formally ratified. Congress passed the Revenue Act of 1913. That year, the richest 3% of Americans owed taxes. The progressive government's desire for revenue exploded, and tax the rich quickly turned into their 5-year plan to tax everyone. Tax rates increased to 15% in 1916, to 67% in 1917, and to 77% in 1918. Everything changed. Prior to 1913, any tax placed on U.S. citizens was levied equally on all citizens. All taxation was temporary, and every tax was later repealed, with none existing today. After 1913, all taxes have been levied progressively rather than equally. Progressive taxation is permanent, and no tax has been repealed since then and still exists today. In 1943, the government required employers to deduct taxes directly from workers' paychecks. Withholding made income tax collection simple. Government income exploded, and workers received smaller paychecks. Once the government could tax income directly, there was no limit to how much revenue it could raise. And with unlimited revenue came unlimited spending. Personal, individual income tax, Social Security, and Medicare taxes on earned income now make up over 90% of federal revenue. The founding fathers and architects of the Constitution purposefully wrote it and planned that citizens would live their entire life without ever interacting with a tax collector. Unfortunately, they had never met a progressive, and now we interact with tax collectors on a daily, weekly, monthly, and yearly basis, forever. The question of how to fund a government is never just about money. It's always about power and permanent control. I bet you are also shocked after learning this. Most people just think taxes have always existed, which isn't true and good to know, but here's the most important point to all of this. The progressive politicians again have voters shouting and demanding to tax the rich. In politics, there are no new ideas. There are only ideas that have been tried and failed, and ideas that have been tried and paid off. Tax the Rich was really a 5-year plan to tax everyone. Now you know that the tax the rich idea in 1912 led to the largest financial payoff for the government and politicians in history, while reducing every person's paycheck, literally. The progressive politicians are pushing the same lie today. It worked once, so they are trying again. They won't stop with just the rich this time either. They will tax everyone like before. History always repeats itself, so share this information with everyone, because friends don't let friends get fooled again. Please like, share, comment, and subscribe. Thanks, those little things really mean a lot to us.